All right, so we're looking at a question dealing with bank reconciliation statements. So, bank reconciliation is all about making sure that your cash book and your bank statement have the same balance. So, when you're dealing with questions in this topic, you'll be given certain transactions. And what you're supposed to do is you need to pick which transactions need to go into the cash book and which transactions need to be in the bank statement. And once you figure those out, the balance for the cash book should be the same as the balance for the bank statement. So here's a question. At 31st December 2007, the balance on the cash account was 11,820, but the balance appearing on the bank statement was 15,000. So we've been given the reasons for the differences and they're asking us to calculate the correct balance on the cash account and prepare a bank reconciliation statement. So the first thing we need to do is start with how to get the correct balance for our cash account. So the balance we're starting with is this 11,820. Put it on the debit side. Right. So usually the balances on the for asset accounts like the cash book usually comes on the debit side. If the balance is on the credit side, it means you are owing. All right, you are owing money to the bank now. All right, so we now look at the transactions. We see which transactions need to go into the cash book. Here we've got bank charges of 20 kwacha. So the bank is aware of this charge. We probably were not aware of this charge, so we have to record it. All right, so remember, this is an asset account, this cash account. It increases with debit, reduces with credit. So any payments, payments come on the credit side. And then money coming in or receipts come on the debit side. Okay, think of it like that. So here, bank charges, we have to pay the bank 20 kwacha. So we credit our cash book. Now remember, this is the bank section of the cash book. All right. Remember, the cash book has got the cash section and the bank section. So here we're focusing on the bank section of the cash book. So bank charges 20 kwacha. A payment of 1,200 had been entered in the cash account as 2,100. So here there's an error that has been made. We've overstated the payment, meaning we recorded that we've paid more than we actually paid. So we need to correct this error to show that we paid only 1,200. So let me use this T account here at the bottom to show you how we can correct this error before I put it in the cash account there, cash book. All right. So yes, initially when this error was being made, the person recorded it on the credit side as 2,100. Right. So this is wrong. It has to be 1,200. So the first thing we need to do is we need to find out how much was the payment overstated by. The payment was supposed to be 1,200. Okay, but they wrote 2,100. So I'm going to say 2,100 minus 1,200, 900. So the payment is overstated by 900 kwacha. So we need to debit the cash book, all right? 900 kwacha. Because if we debit, all right, we're going to see 2,100 minus this 900 kwacha. We've reduced the understatement and we've got the correct amount. Okay. So remember this, as I've written down here, whenever you have an overstated payment find the difference and debit the cash book. Okay. Whenever you have an overstated payment, find the difference and debit. If you have an understated payment, it's the opposite. Find the difference, then credit the cash book. All right. So just remember these 4 points I've put here, because usually in these type of questions, you might have an overstated payment, an understated payment, an overstated receipt, or an understated receipt. Okay. So you must know how to correct these errors. Okay. Like for example, here, let's say if after we find out that the payment was overstated by 900 and I credit the cash book, it means I'm overstating the cash book more, the payment. I'm overstating it. I'm even overstating it more now. It's now 3,000. So that's why we debited. But if you have an understatement, credit the cash book so that you remove the understatement and get the correct amount. So that was just an illustration, but in our cash book here, we're going to put on our debit side overstated payment 900 kwacha. Transaction 3, a check for 200 kwacha had been dishonored. Okay, so the bank told us we the money, the person who's trying to pay us doesn't have money, so we haven't received any money. So initially, when we received the check, we debited our cash book 200. Now, once the check is taken to the bank and the bank finds out that there's insufficient funds, it means in reality, no money has actually come in. So we need to remove this 200 which we debited earlier on. So in order to remove it, we need to credit. Okay, because when we credit, then it means no error has occurred. Zero. Okay. So as I said, this is an illustration here, but on the adjusted cash account, you're going to put this honored check 200. All right. So the remaining two transactions have to go on the bank statement. Right. So we need to calculate our new balance for the cash book. Since the debit side looks greater, so we get the total, that is 12,720. Okay. The total on the credit side is 200 plus 20, that's 220. So our balance carried down is going to be 12,720 minus 220, 12,500. The balance brought down. So that's the new balance for our cash account. Now we go to the bank reconciliation statement. Okay. So whenever you're making a bank reconciliation statement, you can either start with the balance of the bank statement that you've been given in the question, or you can start with the new balance for your cash account. So we'll start with the balance as per bank statement, okay? Because this one's the easiest to follow through. Balance as per bank statement. So once you start with the balance as per bank statement, you have to end with the balance as per adjusted cash account. Okay, so here, since we're starting with the balance for the bank statement, we need to end up with the 12,500 at the end. Okay, so the balance for the as per bank statement, they told us 15,000 kwacha, credit side. Now the bank side is like a mirror of the cash account. Okay, on our cash account here in the business, debit side, it increases with debit and reduces with credit. Now on the bank side, it's the opposite. It increases with credit and reduces with debit. Okay, so when you see a bank statement with a credit balance, it means that's a positive balance. If you see a bank statement with a debit balance, it means that's a negative balance. It means you are owing. All right. Remember that. So since on the credit, we have a positive number. Then we're going to say less unpresented checks. Unpresented checks or outstanding checks, these are just payments. You at your business are aware that you made them, the bank is not aware of them. So that's why we're including them. So since it's a payment, it means we are subtracting. That's why we're saying less unpresented checks. Then you're going to say add lodgements or unaccredited checks. Okay, if you see the word lodgement or unaccredited check, just know it's money coming in. Okay, so here, this 4,000, this is money coming in. That's why we're adding. Okay, so we're supposed to end with the balance as per adjusted cash account. Okay, so we're going to say 15,000 minus 6,500 plus 4,000, you get 12,500. Right, which is supposed to be the same as the adjusted cash account. So always remember that when you start with the balance for the bank statement, you need to end with the balance of the adjusted cash account. Now, if we wanted to start with the balance as per adjusted cash account, it's like we're moving in reverse. Okay, we start with the balance as per adjusted cash account. Start here with 12,500. So I said we're moving in reverse. All right. So any unpresented checks, where any payments you add, it's like you're moving backwards. Add unpresented checks. 6,500. Then we're going to subtract any lodgements. So I say less lodgements. 4,000. We're supposed to end with the balance as per bank statement. Okay, so we're going to say 12,500 plus 6,500 minus 4,000. Balance as per bank statement 15,000. Okay, so if you start with the balance for the adjusted cash account, you need to end with the balance as per bank statement. But it's like you're moving backwards. So any payments, you add them back. Any receipts, you subtract them.